Hello guys, welcome to my channel. The less is more. So today we will discuss an editorial from Indian Express. Okay, and it is about the economy. Since we haven't discussed economy before, there is a long time before we had discussed economy. So let's start the economy. So the title of the editorial is an extended pause. So in line with the expectations, the Monetary Policy Committee of the Reserve Bank of India has voted unanimously in its August meeting to keep the policy repo rate unchanged at 6.5%. Alongside, the committee members voted 5-1 to keep the stance unchanged, focusing on the withdrawal of accommodation to ensure that inflation progressively aligns with the target. The tone of the RBI governor's statement was distinctly hawkish as he emphasized the readiness to act and reaffirm the policy objective of aligning inflation with the central bank's target. However, considering that the requirement for a policy response at this juncture is curtailed due to a supply side induced spurt in food inflation and a modernization in core inflation, it would seem that the MPCs like to maintain status quo on rates in the near term. The trajectory of inflation, however, remains unpredictable. In its June policy, the RBI had projected it at 5.2% in the second quarter. In its August meeting, it substantially revised its projection upward to 6.2% as prices of vegetables have soared in July and August. While this surge is likely to be temporary, the commentary from the RBI does suggest that the central bank believes that vegetable prices will correct in near term. This remains considerable ambiguity over food prices on account of uncertainty over the distribution of monsoon and impact of El Nino. During such periods, as the RBI governor has underlined, supply side interventions can limit the severity and duration of such shocks. On Wednesday, the Union Food Ministry announced that it was offloading 50 lakh metric tons of wheat in the open market in a phased manner. This could have a moderating influence on prices. However, other factors such as higher crude oil prices also pose risk to the trajectory of inflation. The central bank has now revised upwards its full year inflation forecast to 5.4% from 5.1% earlier. Alongside, it has also taken steps to absorb the surplus liquidity generated by the return of the 2000 notes to the banking system by imposing an incremental cash reserve ratio of 10%. On the growth front, the RBI remains optimistic, expecting economic momentum to continue. The central bank has written its forecast for GDP growth this year at 6.5%, even as external demand weakens and the cumulative rate hike of 250 basis points are still working their way through the system. However, considering the uncertainty in the global economy, the central bank must remain vigilant on all fronts. While it has done well to look through this spurt in inflation, it must be cautious. As the governor's statement also acknowledges, frequent incidents of recurring food price shocks, however, pose a risk to anchoring of inflation expectation. The future course of monetary policy will be influenced by how growth and inflation evolve over the coming quarters. So, this was for today. Let's find out the 5 new words that we can use in the daily conversations. So, first is maintain status quo. Unchange, that means remain stagnant or constant or as it is, unchanged. Third is alongside. Distinctly hawkish. Trajectory of inflation. Okay. So these are the 5 new words that we can use in daily conversation as well as writings. Okay. So I also recommend you to comment in the comment section the 5 new words that you would like to use, okay, in your terms for your conversation and writing. Okay. So please comment, it is for you, I am not saying for myself, because I am here just write down 5 new words in the video itself, so that my task is over here. Okay. So I am inspiring you to take the action, not just think that one day I will do, that day will never come. Just do it now. Okay. Okay. So this was for today. I hope you would be understanding. So till then, bye bye. Signing off for the day.